Welcome back, everybody, to another deep dive. And today, we're going to be taking a look at China's economic landscape.
Always a hot topic.
Yeah, always something happening there. Um, and we've got some really fascinating analysis today looking at, the U.S.-China relationship
Right.
and how that impacts you as an investor.
Absolutely.
So get this, despite all the headlines about trade tensions and all the back and forth between the U.S. and China, there's this quiet surge of investors shifting their focus toward Chinese assets.
Interesting.
Yeah. And today we're going to unpack why that is so we can understand how it might impact our own investment decisions. So,
Yeah, I think it's fascinating how these global dynamics, especially the US-China relationship, are really reshaping the investment landscape.
yeah,
You might assume that the US market is still like the dominant force.
right.
There's a growing sense that China's stability and that consistent policy direction that they've had is making it increasingly attractive.
It's interesting, right? Because we've got this almost paradoxical situation where the U.S., this place that's always been seen as like the bedrock of stability,
Right.
is now facing all this uncertainty because of policy swings and the government, changing its mind all the time.
Absolutely.
But on the flip side, China is projecting this sense of calm amidst all the global turmoil.
Right.
So how is that impacting actual investor behavior?
Yeah. So in the US, investors are getting nervous because of this policy volatility. They're seeking safer havens, and it's leading to this preference for bonds over stocks.
Makes sense?
It's like if you're trying to build a house on shaky ground, you don't feel very secure.
No, definitely not. But you're saying China's different.
Yeah. So in China, the consistent policy direction that they have, especially in key growth areas like tech and innovation, is fostering the sense of stability and predictable growth.
Right.
And so businesses are expressing a much more positive outlook, especially in those sectors.
So they're building on solid bedrock, as you might say.
Excellent.
Okay. I'm starting to see the contrast here, but beyond just perception, are there any tangible signs that
Yeah.
this shift towards China is actually happening?
Yeah, I mean, for example, look at the recent surge in excavator sales in China.
Hmm.
I mean, that's a clear indicator of infrastructure growth, and that typically spills over into other areas like consumer spending.
Right.
So that's signaling that people have confidence in China's continued economic expansion.
That's a really good point.
Mm,
I actually remember reading about that, but I hadn't connected it to the bigger picture of investor confidence.
yeah,
So on the surface, things seem pretty rosy for China.
right.
But, I'm always a little bit skeptical. Is it really as good as it appears?
Yeah.
What's the real story when we actually look at the economic data?
Yeah, that's where things get really interesting because the data paints this kind of mixed bag.
Uh-oh.
It shows this very complex picture of China's economic recovery.
So it's not all sunshine and rainbows then?
Not entirely, no.
Okay.
So while we are seeing these positive indicators like recovering real estate sales and a very strong performance in those tech-driven sectors,
Right.
there are some potential headwinds that we should consider as well.
Okay. Let's unpack those headwinds then.
Hmm.
What should investors be aware of?
Well, one concern is definitely the deflationary pressure that the Chinese economy is facing.
Okay.
We're also seeing a weakening export demand due to those ongoing U.S. tariffs, which adds another layer of complexity to the situation.
Right.
And it's important to acknowledge that even with this positive momentum, we're seeing that stronger policy support might be needed to really stimulate consumption and ensure that robust growth continues.
That's concerning. And you mentioned technology playing a key role in all this. Everyone seems to be talking about AI as the next big thing.
Right.
But is it really the solution to all of China's economic challenges?
So here's a surprising fact. Despite all the hype around AI, experts actually believe that it alone won't be enough to counter those deflationary forces.
Wow, that's a curveball.
Yeah.
I really thought AI was the silver bullet that was going to fix everything.
Right. It's not quite that simple.
So if AI isn't the single solution,
Mm-hmm.
what else is attracting investors to China then?
Well, smart money is really flowing toward those sectors that are demonstrating resilience and potential despite these challenges.
Okay.
So there's this clear shift away from the traditional reliance on real estate towards a more tech-driven growth model.
So China's going through this economic metamorphosis,
Yeah.
shedding its old skin and embracing this new tech-driven future.
Yeah, you could say that.
But where exactly are these savvy investors placing their bets within this evolving landscape? What specific areas are they looking at?
One area that's drawing a lot of attention is China's financial sector.
Interesting.
Yeah, it's finally showing signs of stabilization after years of restructuring, and we're seeing a shift towards more tech-driven lending models.
Hmm.
And the insurance sector in particular is becoming increasingly attractive to investors.
Hold on. You're saying that after all the turbulence and uncertainty in China's financial system, it's now becoming like a hotspot for investors.
It might seem counterintuitive, but yeah, the numbers tell a really compelling story.
Okay.
One key indicator is this surge in what's called southbound investment,
But
which
when?
refers to capital flowing from mainland China into Hong Kong's stock market.
Right?
This is a sign that investors are increasingly confident in the region's financial stability and its future potential.
Okay, I'm starting to get a clearer picture of this shift in investor focus, but let's get down to the nitty-gritty here.
Sure.
We've talked about these like overall trends, but where are the real opportunities for someone who's looking to, actually invest in China's stock market like today?
Yeah, so we're seeing a lot of interest in a few specific sectors that are really poised for growth.
Okay.
The consumer sector, for example, is expected to experience a rebound as the real estate market recovers.
Right, so as people feel more confident about their homes and, their finances, they're more likely to spend, and that's going to boost the consumer sector.
Exactly. It's this classic domino effect.
Yeah.
One thing leads to another.
But is this like a uniform surge across the board, or there's some areas that are going to do better than others?
Yeah, it's important to remember that this recovery in consumer spending is likely to be gradual and uneven across different segments.
Okay.
So it's not a one-size-fits-all situation.
Got it. So it pays to be selective and strategic.
Mhm.
What about the AI sector? It seems like everyone's jumping on that bandwagon these days.
Yeah, AI definitely holds immense potential, but like any emerging technology, it's crucial to temper expectations and avoid getting caught up in all the hype.
Yeah, we don't want to get swept away by all the excitement and,
Yeah.
end up investing in companies that are all promise and no substance.
Exactly.
So what's the expert advice for navigating this AI investment landscape in China?
You really need to focus on companies with a proven track record of profitability and a clear strategy for applying AI to solve real-world problems.
Okay.
Look for those companies that are generating tangible results, not just making grand claims about, future breakthroughs.
Okay, so practicality over flashy promises.
Exactly.
Look for the companies that are walking the walk, not just talking the talk, but even with like, the
Yeah.
most promising sectors and most well-researched companies.
Right,
Every investment comes with risk,
right.
right? Especially in a complex and dynamic market like China's.
Absolutely. And one of the biggest risks when you're investing in China is the ongoing geopolitical tension with the U.S.
Yeah, the elephant in the room.
Yeah, exactly. Those trade wars, the tariff battles, and the tech restrictions all create this huge amount of uncertainty and can really significantly impact specific sectors.
Like trying to navigate a minefield, one wrong step.
Boom.
Exactly. So how can investors even begin to mitigate those risks?
Well, diversification is always key. Don't put all your eggs in one basket, so to speak.
Yeah.
Spread your investments across different sectors and consider geographical diversification as well.
So spread the risk. Don't rely solely on any single market or sector. That makes a lot of sense.
Yeah.
But what about the argument that China's rise is inevitable?
Right.
Shouldn't we all just be, piling into Chinese assets and just riding the wave of its economic dominance?
Yeah, it's tempting to think that way, but it's really important to remember that nothing is guaranteed in the world of investing.
Right.
I mean, China faces its own unique set of challenges, including, internal economic imbalances, demographic shifts, and environmental concerns.
Right.
And its political system also presents these unique risks that investors really need to understand.
So it's not just about, jumping on the China bandwagon. It's about taking this nuanced and informed approach.
Yeah.
What are some of the key questions that investors should be asking themselves as they consider, allocating capital to China?
So first and foremost, you need to assess your own risk tolerance.
Okay.
How much volatility are you comfortable with? I mean, China's markets can be pretty turbulent, and those geopolitical tensions can definitely add to that volatility.
It's not a place for the faint of heart or for those seeking a quick and easy return.
Exactly. Second, consider your investment horizon. Are you looking for those short-term gains, or are you after that more long-term growth?
Okay.
And China's growth story is likely to unfold over decades, so patience is absolutely key here.
It's a marathon, not a sprint.
Exactly. Third, do your research. Don't just invest in any company with China in its name.
Right.
Really understand the specific sectors, the competitive landscape, and the regulatory environment.
So be informed, be strategic, and be realistic about the risks and the potential rewards.
Absolutely. And finally, stay informed.
Okay.
The global landscape is constantly shifting, and China's role within that is also evolving rapidly. So keep your finger on the pulse of geopolitical developments, economic trends, and policy changes.
Right. So be proactive, stay engaged, and adapt to this ever-changing dynamic of like the global stage.
Exactly. Investing in China, or any market for that matter, requires this really active and informed approach.
Well, that is a lot to digest, but it
Yeah.
has been an incredibly insightful journey so far.
It has.
We've explored the contrasting dynamics of the U.S. and Chinese markets, the opportunities and risks associated with, investing in specific sectors,
Right.
the importance of diversification and risk management, and of course, like the profound impact of China's rise on the global investment landscape.
Yeah, it's been a fascinating deep dive, and I really hope our listeners feel equipped to navigate this complex and ever-changing terrain.
Yeah, me too. And remember, folks, the journey doesn't end here. Keep exploring, stay informed, and as always, happy investing.
Absolutely.
And we'll be back soon with another deep dive to explore more of what's happening in the world of finance and investment.
Looking forward to it. And what's really interesting is that despite all the hype surrounding AI, experts don't see it as a cure-all for China's economic challenges.
Yeah, it's not like a magic bullet.
Exactly.
Okay.
It's just one piece of the puzzle.
That really surprised me too. I think there's this expectation that AI is just going to like magically solve every problem.
Right.
But the reality is a lot more nuanced.
Yeah, for sure.
So if AI alone isn't enough,
Yeah.
what other factors need to be considered then?
Well, experts believe that China needs like a broader set of tools to counter those deflationary pressures.
Okay.
It's kind of like if you're building a house, you need more than just a hammer.
Right.
You need a saw, you need a screwdriver, a whole range of tools to get the job done right.
Right. The right tools for the job.
Exactly. And similarly, China needs a diverse set of policy tools and structural reforms to build a truly resilient economy.
Okay. That analogy makes perfect sense. So let's get back to those investors who are, looking for opportunities within China's evolving landscape. We've talked about the big picture, but let's zoom in on some specific sectors where investors might find those, winning investments.
Sure. A great place to start is the consumer sector.
Okay.
As we talked about earlier, the recovering real estate market is expected to boost consumer confidence and spending.
Right. So it's kind of like this ripple effect. A stable housing market leads to this wave of confidence that spreads throughout the economy.
Exactly. One thing leads to another.
But is this going to be like, a uniform boom across the board? Or are there some areas that are going to, benefit more than others?
Yeah, so it's important to note that the recovery in consumer spending is likely to be gradual, and it's going to be uneven across different segments.
Okay.
Not every area will see the same surge at the same time.
Right. So it's not like this uniform boom,
Yeah.
but a more selective and strategic recovery.
Yeah, I would say so.
Okay. So investors need to be, discerning and really understand the nuances of the market.
Absolutely.
Okay. Now let's talk about the AI sector. I mean, it seems like everyone's jumping on the AI bandwagon these days.
Yeah.
But we don't want to get swept up in all the excitement and invest in companies that are all promise and no substance. So what's the expert advice for navigating that AI investment landscape in China?
Well, the key is to really focus on companies that have a proven track record of profitability
Okay.
and a clear strategy for applying AI to solve those real-world problems.
So look for companies that are actually generating tangible results, not just making those big promises about future breakthroughs.
Exactly.
Okay, so practicality over flashy promises.
Yeah, I think that's a good way to put it.
Look for the companies that are walking the walk, not just talking the talk.
Absolutely.
But even with the most promising sectors, the most well-researched companies,
Yeah.
every investment comes with some level of risk,
Right.
right? Especially in a complex and dynamic market like China.
That's true. And I think one of the biggest risks when investing in China is that ongoing geopolitical tension with the U.S.
Right, that elephant in the room.
Exactly. All those trade wars, the tariff battles, the tech restrictions create a lot of uncertainty, and that can really significantly impact certain sectors.
Just like you're navigating a minefield, one wrong step. Exactly. So how can investors even begin to mitigate those types of risks?
I think diversification is key.
Okay.
You know the old saying, don't put all your eggs in one basket.
Right.
You got to spread your investments across different sectors and consider geographical diversification too.
So spread the risk. Don't rely on any single market or sector.
Exactly.
That makes a lot of sense. But what about the argument that, like, China's rise is inevitable? Like, shouldn't we all just be piling into Chinese assets and riding that wave of its, economic dominance.
It's tempting to think that way, but it's so important to remember that nothing is guaranteed in investing.
Right.
China faces its own set of unique challenges, things like internal economic imbalances, those demographic shifts we talked about, environmental concerns.
Yeah, definitely.
And even its political system presents some pretty unique risks that investors really need to understand.
So it's not just about jumping on the China bandwagon. It's about taking a nuanced and informed approach.
I would agree with that.
Okay, so what are some of the key questions that investors should be asking themselves as they consider allocating capital to China?
Well, first and foremost, I would say assess your own risk tolerance.
Okay.
How much volatility are you truly comfortable with? Because China's markets can be pretty turbulent.
Yeah.
And those geopolitical tensions can definitely add to that volatility.
It's not a place for the faint of heart or for, those seeking a quick and easy return.
Definitely not. Second, you need to consider your investment horizon. Are you looking for those short-term gains, or are you more interested in long-term growth?
Okay.
Because China's growth story is likely to unfold over decades.
Oh, yeah.
So patience is key here.
It's a marathon, not a sprint.
Exactly. And third, do your research.
Okay.
Don't just invest in any company with China in its name.
Right.
Really understand the specific sectors, the competitive landscape, and the regulatory environment before you put any money down.
Be informed.
Yeah.
Be strategic, and be realistic about the risks and the rewards.
Absolutely.
Yeah.
And finally, stay informed. The global landscape is always shifting, and China's role in that is evolving very quickly.
Yeah.
So keep your finger on the pulse of geopolitical developments, economic trends, and policy changes.
Right. So be proactive, stay engaged, and adapt to that ever-changing dynamic of the global stage.
Exactly. Investing in China, or any market for that matter, requires this really active and informed approach.
Well, that is a lot to digest, but it has been an incredibly insightful journey so far.
Yeah, it has.
We've explored the contrasting dynamics of the U.S. and Chinese markets, the opportunities and risks associated with investing in specific sectors,
Right.
the importance of diversification and risk management, and of course, the huge impact of China's rise on the global investment landscape.
Absolutely. And I think one really fascinating detail that came out of our research for this deep dive is that despite all the focus on AI, experts really believe it's not enough on its own to counter those deflationary forces in the Chinese economy.
Yeah, that's a really important point. It kind of highlights the need for this multifaceted approach.
Yeah.
And it reminds us that even in a rapidly developing market like China, there are no simple solutions.
Definitely not. It underscores the need for a very nuanced understanding of the Chinese market and a willingness to adapt to its ever-changing landscape.
Well said. And on that note, we'll wrap up this second part of our deep dive. Stay tuned for part 3, where we'll take a much broader look at those geopolitical implications of China's rise and how it's going to shape the future of global investing. It's going to be fascinating. You won't want to miss it. Okay, so we're back for the final part of our deep dive into China's economic landscape. We've covered a lot of ground so far. We talked about those differences between the U.S. and Chinese markets, the potential in those really exciting sectors like tech and consumer goods. And of course, we can't forget about those risks, especially the ones coming from, those tricky geopolitical tensions.
Right.
But now I want to zoom out a little bit and think about the bigger picture here.
Okay.
How is China's rise reshaping the global stage? And what does that actually mean for investors, like us?
Yeah, that's the million-dollar question, isn't it?
Yeah.
I mean, as China's economic and political influence grows, it's sending these ripples across the entire globe. We're not just talking about trade flows and market valuations anymore.
Right.
We're really seeing this fundamental shift in the balance of global power.
Mm.
And that has some pretty profound implications for investors everywhere.
So it's not just about picking the right stocks in China. It's about understanding this huge tectonic shift in global dynamics.
Exactly.
Where do we even begin to make sense of such a monumental change?
Well, I think it helps to start by examining China's evolving relationship with the U.S. I
Yeah.
mean, for decades, the U.S. has been the undisputed leader of the global economic order.
Right.
But China's rapid growth is really starting to challenge that dominance, which is leading to a lot of friction and uncertainty.
Right. So almost like two powerful magnets, both trying to exert their influence on the surrounding metal filings or something.
Yeah, I like that visual. So you've got this push and pull between the U.S. and China, each vying for influence and control.
Okay, so how does this actually play out in practical terms? What are the tangible consequences of this like power struggle.
Well, we see it in those trade wars that we've been talking
Right.
about, those battles over technology and the competition for, resources and allies.
Mm.
It's creating a lot of volatility in the markets, impacting those global supply chains, and it's really forcing businesses and investors to rethink their strategies.
Yeah, it's not just like, some abstract geopolitical maneuvering.
Right.
It's having a real-world impact on businesses and investments.
Exactly.
So how can investors actually navigate this kind of like turbulent landscape? I mean, it almost feels like trying to sail a ship through a hurricane.
It's definitely challenging, but I think one key strategy is diversification.
Okay.
And not just across different sectors, but geographically as well. Don't put all your eggs in one basket, whether that's the US or China.
Yeah.
Consider investing in other emerging markets that offer, good growth potential, but also reduce your exposure to any single geopolitical risk.
So spread the risk,
Yeah.
diversify your portfolio, and don't get too attached to any one market or region. That makes sense. But what about the argument that China's rise is like inevitable?
You're right.
Shouldn't we all just be, piling into Chinese assets and riding the wave of its economic dominance?
Well, it's tempting to think that way, but again, it's important to remember that nothing is ever guaranteed when it comes to investing.
Right.
I mean, China faces its own set of challenges, like we talked about, those internal economic imbalances, demographic shifts, environmental concerns.
Yeah.
And even their political system presents these unique risks that investors need to be aware of.
So it's not just about, jumping on the China bandwagon.
Right.
It's about taking a much more nuanced and informed approach.
Exactly.
So what are some of the key questions that investors should be asking themselves as they consider allocating capital to China?
Well, I think first and foremost, you really have to assess your own risk tolerance. How much volatility are you truly comfortable with? Because remember, China's markets can be really volatile.
Yeah.
And all those geopolitical tensions can add to that volatility. So it's not a place for, those who are risk averse.
Right. Not for the faint of heart.
Exactly. Second, consider your investment horizon.
Okay.
Are you looking for those short-term gains, or are you more focused on long-term growth? Because China's growth story is likely to unfold over decades. So patience is key here. It's a marathon, not a sprint.
Right.
And third, do your research.
Okay.
Don't just invest in any company with China in the name.
Right.
You really have to understand the specific sectors, the competitive landscape, the regulatory environment before you put any money down.
So be informed, be strategic, and be realistic about the risks and potential rewards.
Exactly. And finally,
Yeah.
stay informed. The global landscape is constantly changing, and China's role in that is evolving rapidly. So keep your finger on the pulse of those geopolitical developments, economic trends, and policy changes.
So be proactive, stay engaged, and adapt to the ever-changing dynamics of the global stage.
Exactly. Investing in China, or any market for that matter, requires an active and informed approach.
Well, that's a lot to consider, but it's been a really insightful journey exploring all of this.
It has.
We've looked at those contrasting dynamics between the U.S. and Chinese markets, the opportunities and risks that come with investing in those specific sectors,
Right.
the importance of diversification and risk management, and of course, a huge impact of China's rise on the global investment landscape.
Yeah, it's been a fascinating deep dive, and I hope our listeners feel like, they're better equipped to navigate this complex and ever-changing terrain.
Me too. And remember, folks, the journey doesn't end here. Keep exploring, stay informed, and as always, happy investing.